Welcome back to Simply Money. Have you ever looked at QQQ and wondered how would it have done if I had bought into this a few years back? I've been doing a series of videos. I've done SCHD, I've done JEPQ, I've looked at SPY. We're going to be looking at various ETFs, different stocks, and how they performed since March of 2017 up until March of 2024, just to show you how investing, sticking with it, and allowing the ups and downs to go and to ride through those help you to achieve your financial independence. Not to get discouraged when you see the downs, not to get overly excited when you see the ups. Remember, somebody may come up to you in 2022 and say, "Oh my gosh, you've lost so much money." And you can simply say, "No, I haven't, because I haven't sold anything. When I sell them, I lock in the losses." Likewise, when the stocks go crazy, when they skyrocket, people may come up to you and say, "Oh my gosh, look how good you're doing. Your stocks are going crazy. You've made so much money." No, I haven't made any money because I haven't sold them. You only lock in the gains or the losses when you sell. Investing in the stock market is a long-term plan. These ETFs we've been looking at allow you to see various sectors, various ETFs, and how they performed and how high and low they go. They're beta. When you look at the S&P 500, that would have a 1 beta. Is the stock we're looking at higher or lower volatility than the S&P 500? We're going to look at QQQ today, a very popular ETF amongst stockholders. We're going to see how this performed. We're going to use our same scenario we've been using. If you took $50,000 on March 1st, 2017, put it into the QQQ and just left it alone, reinvesting any dividends and letting it ride, where would you be? So let's look at this real quick. In March of 2017, with $50,000 at $130.85, you would have bought 382 stocks of this in March of 2017. And we're going to look at the first year, just 2017, and see how it performed. When you initially get in, sequence of returns in retirement, we talk about it all the time. But when you buy a stock, you have the same feelings. It seems like you buy a stock or an ETF and it just drops immediately. That's normal. It happens. Don't get discouraged. Sometimes you get lucky. You buy and it's on an upward trajectory, and it's okay, but don't get too excited and don't get out thinking, "Oh, I've made a quick buck, I'm going to sell this." It's the long-term ride we're looking for. So as we see here, your dividends, you're getting paid 27 cents per share on this QQQ when you first bought it. By the end of the year, that's gone up. It had 38, 32, and 33. So we're going to see this trend where some quarters are lower and higher throughout the year, but from year over year, we're hoping that goes up, because that's one of the things about dividend snowball. The higher those go, your yield on cost increases. It's a great snowball effect. The dividend payment from that $50,000 investment in March 2017 was $103. That was your first quarterly payment, and you were able to buy stock at $131.65. Went up about $1, and you were able to buy just under a share, 7.78 of a share. So now you're up to 382.9 shares. Your total value's gone up to $50,400. By the end of the year, you see the increase in the dividends, the increase in the dividend payment. You see the quantity that you're buying. So you've gained a couple shares throughout that year by reinvesting the dividend. Your value's gone up pretty well here, up to $158 from $130 that first year. And so at the end of the year, you've gained $11,000. That's a great first year. QQQ started out strong if you had bought in on March 1st, 2017. Like we do, let's scoot down to where we've seen some increases, and then we know some things that happen. We all have to remember COVID. January, February, March 2020, COVID was hitting hard. Everyone was panicking. In March of 2020, the stock market began crashing because people panic. They listen to the news, they sell, they get out, they just go to extremes instead of staying strong and riding through the waves. Let's just kind of go through this real quick as we start at 2018. The dividend is now 28 cents, goes up all the way to 42 cents. By 2020, you're looking at 56 cents. You can see a steady, slow increase of this dividend. May not seem like a lot, but you're not only increasing the dividend per share, you're also increasing the number of shares you have because you're reinvesting those dividends. It's building that snowball. Remember, a snowball starts small. As you begin rolling it, and it takes on a few pennies here and there, a few extra stocks here and there, it begins getting bigger and bigger, and that exponential growth takes off after some years. Be patient as you're growing your wealth. 2020, you can see here, the stock price is going up. You can see here as you were buying into this, the stock price is going up. As we get down to the end of 2020, we're up to $309 on that share. On March of 2020, COVID, we'd reached a high of $212. So right here, you're looking good. At the turn of the year, right before COVID really struck, you're looking good. You're thinking, oh, I'm up $33,000. That's awesome. Then COVID hits. There's a quick dip down to $179. Again, this is where we don't panic. We don't sell. This was a very short-lived sell-off. And look, by June, it's way above where it had dropped off. So a nice recovery of that. You can see the dividends continued growing. Your dividend payments continued to grow. You're now getting a $220 dividend payment. Your stock price is worth $309 per share. You're up to 394 stocks because you've been slowly accumulating more. And your wealth, the $50,000, has turned to $122,000. Again, great return, great investment. Well, let's slide down here. Let's look. We know 2022 brought some more scare for everyone. The stock market had its dip. So we can see here, in 2021, it starts recovering. We get all the way up to $384. Then it starts sliding. 2022, we're down to $350, $276, $288, $268. We get down to a low here. This is back right about where we were at the end of COVID recovery of 2020. And you see this back down to $268. The dividends are still slowly increasing. You get now at the end of 2022, you're getting a 66 cent per share, and you're up to 399 shares, but your wealth is down to $107,000. Again, you're not locked in. You didn't sell this, so you're in good shape. Yes, it's scary because you dropped from this high of 152 here. It slowly starts dropping. You're watching it. You're going, oh my gosh, it's crashing. No, it settled at $107,000. Then it began recovering again. This is actually great because during this, you could have been, if you were doing dollar cost averaging through this whole period, this would be a great time to buy more because it's on sale. It's lower cost. It's back down to $268. I don't want to buy here. This would have been the worst time to buy so far, but we're just doing a lump sum, so it doesn't really matter. We're riding the highs and lows, the ebbs and flows, and we see that we're down to $107,000. As we go down, we get to the end of this period that we're looking at of March of 2024. You can see after that low, 2021, it starts picking up. It begins increasing. We hit our low, and now we're starting to climb back up. 2022 hit that low of 268, and we go to 307, get all the way up here. March 2024, we're up to $435 per share. Remember, we bought in at $130 per share. That's a great return on investment. Your total value now is $175,000. So your $50,000 has grown. The dividends have grown. Your dividend payments have grown. Don't let this one fool you. This, as you can see, was 2 times in December. They paid an extra dividend. That happens sometimes. That's great. That's just a little bonus. So for December, you're actually looking at $1.03 per share that you got in dividends. They just paid it in different segments, and that happens sometimes with dividends. They pay out. Great opportunity. You got an extra $88 bought an extra quarter of a share. Your value has gone up. So let's look at the end of this. You've accumulated $5,000 of dividend payments that have been reinvested. Your share price has grown 232%. You've gained 20 shares. You didn't buy any more shares. You just reinvested the dividends. You're 20 shares higher than you were when you began. Now, this is a 7-year period. Imagine doing this over a 20, 30, 40-year period. This snowball gets crazy out of control in a positive way. And you've gained a value of $124,000. So imagine you invested $50,000, you set it in there for 7 years, and you earned $124,000. That's a great return on investment. Look back on some of the other videos. We have SOXX that we looked at. We have SCHD that we looked at. We have JEPQ, SPY that we've looked at. I have links in the description below. I put those up here throughout the video so you can recall what we did on those. If you haven't watched those, check those out. Compare which one is your favorite. Are you invested in any of these? Put it down in the comments below. Let me know what ETF, mutual fund, stock that you're invested in. And if you'd like me to run one of these and show you how it would have performed in this time frame, I'd be glad to do that for another video. Let me know your thoughts. How do you like these videos? Is it something you're interested in for me to do more, putting it on the spreadsheet like this? Does it help you? Give me your comments. I'm always open to your feedback. And hit that like and subscribe button for me. It helps me produce more of these videos. Again, thanks for joining us on Simply Money, and we'll see you next time.